The S&P 500 gained 0.38% on Wednesday, same number as Tuesday. And underneath that identical number, the market did something completely different. It rotated violently. But the story I want to tell you isn't about the rotation. It is about the one stock that quietly did something it hasn't done in weeks. If you're new here, hit subscribe. The free watch list is linked in the description. Exact entries, stops, and targets. No paywall. The macro was textbook. PPI confirmed what CPI told us Tuesday. Headline PPI 5.5% year-over-year, core at 4.7%, and the monthly core number at just 0.2%. Energy cost fell 6.4%. Food prices dropped for the first time in 3 months. 2 consecutive inflation prints pointing in the same direction. Disinflation is real. Fed Chair Warsh testified at 10 a.m. and said the Fed cannot declare victory on inflation. He didn't sound hawkish, didn't sound dovish. He sounded like a man who didn't want to give the market anything to trade on. The market basically shrugged and went back to doing what it was already doing. And what it was doing was rotating violently. Storage chips got absolutely wrecked. SK Hynix fell 9%, Micron dropped 8%, AMD lost 3.5%, Intel fell 4.4%. The Philadelphia Semiconductor Index cratered 4.4%, one of its worst single-day drops in months. The exact names that led Tuesday's rally got sold off without mercy. But the money didn't leave the market. It went somewhere. Apple gained 4%, the best Magnificent 7 performer. Google added 3.6% on cloud and AI search. Meta gained 3%. Amazon 3%. Microsoft nearly 3%. Platform tech, companies with real earnings, real cash flow, real AI monetization, absorbed the capital fleeing the chips, and the single biggest gainer in tech, PayPal, up 17% in one day. I don't think PayPal has ever been the most exciting stock in the market, but on Wednesday, it was NVDA, it gained 0.33%. That is not a typo. On a day when the Nasdaq added 0.62%, when the rest of the Magnificent 7 was ripping, the AI trade that led this market for months is showing cracks. Money is leaving. Don't fight the rotation. If you are long NVDA, consider trimming into any bounce. The trend is your friend until it is and the trend of capital flowing out of semis and into platform tech is the clearest signal on the board right now. But let me tell you about the stock that nobody was watching. Coinbase. This stock has been in free fall since June. It went from $390 to $139 in 6 weeks. That is a 65% decline. Crypto proxy, high beta, the kind of stock that gets destroyed when the market gets nervous. And on Wednesday, in the middle of all this rotation chaos, Colorado did something it hasn't done since the sell-off began. It broke above its short-term trend line. The short-term trend sits at $161.3. Coin opened at $165, dipped to $160.33, within $1 of the trend. And then bounced. It closed at $167.21, up 5.5%. The lower Bollinger Channel is at $171.99, and it has been compressing downward toward price. What that means is coin is now in a compression zone, trapped between the short-term trend below at $161 and the lower channel above at $172. When a stock that has been in free fall starts compressing between 2 key levels, you are watching a potential base form, not a confirmed base. A potential base. Here is how I am looking at this. The $161 level is the line. If coin stays above $161, the compression is intact, and the next move is a test of $172. Above $172, the midterm trend at $183 comes into play. Below $161, the downtrend resumes, and the $13 the 9th of July low is back in the picture. This is not a buy signal. This is a watch list signal. A stock that lost 65% doesn't reverse in one day, but it does stop going down, and stopping is the first step. Thursday morning brings TSMC earnings. After Wednesday, semiconductor bloodbath, TSMC's guidance, is going to set the tone for the entire chip sector. If TSMC sounds confident, the storage sell-off gets a floor. If TSMC hedges or points to inventory issues, the rotation accelerates and NVDA comes under more pressure. On the geopolitical side, Iran has redeployed the ERGC to the Strait of Hormuz. WTI is sitting at $80. Any military escalation sends oil spiking and stocks tumbling. Oil and chip risk. Those are the two things that wake me up at 3 a.m. on Wednesday night. My playbook for Thursday coin, I am watching above $161, still in the compression zone. A breakout above $172 with volume is the entry. Below $161, walk away. NVDA, I am not adding the fund flow is heading the other direction. If you are long from lower, protect your profits. If you are flat, there are better places to look. And if neither coin nor NVDA gives you a setup, there's nothing wrong with watching. Cash is a position, especially when the market has printed two identical 0.38% gains on perfect inflation data. That is not accumulation. That is people selling into strength. Free watch list is in the description. Exact levels for coin, plus the TSMC scenarios I'm watching. See you next time.